The number one inquiry we get here at our firm is, how do I file my taxes as an LLC? Now, the reason that we always get stuck is when somebody says that they're an LLC, they never know how they are seen through the IRS. Hey, my name is Matthew Lopez. I'm here at M7 Taxes, partner with M7 Permits, and today we're going to be continuing our series that we started last week on how to open your trucking business, being one of the most essential steps having your roadmap, and also the second step is opening up your corporation. Now, if you missed that video, we're going to link it down in the description so that you can catch up on the videos and be up to date with this new video coming out today. Today we're going to be talking about how you're able to open up your LLC and understand how you can file your taxes in 5 different ways. So a lot of people, when opening an LLC, this may apply a lot to our US friends who are looking to open up their business, or even if you're somebody watching from Canada, this is a great video for you to be informed if you ever look into expanding into the US and the different ways that you may be able to do that. So to first explain how an LLC works, it's very simple if we break it down into steps. So LLC is the business that you open up as your corporation. That's your business. It will never change. Now, what really changes is how you're seen to the IRS when it comes time to filing your taxes. So if you're an LLC who you're the sole owner, automatically the IRS declares that you're going to be a sole proprietorship, meaning that you're going to be filing your taxes under the 1040. And if you're a non-resident in the US, you're looking at filing under the 1040 NR. Now, that is through the Schedule C. If your only form of income is through your LLC, so your business, and you're going to declare your profit and losses, whatever income is there gets carried over to your personal side. Now, if you open up your LLC and you're first a sole proprietorship, you then have the option to tell the IRS through an election, so you have to ask the IRS to change yourself from being a sole proprietor to possibly a S-Corp or a C-Corp. Through those 2 paths of being a sole owner, being an S-Corp, you're filing your taxes through the 1120S, and going into the C-Corp, you're filing your taxes with the 1120. Now, to go into the partnership side, if you open your LLC as a partnership, meaning 2 or more persons running the company, you are declared as a partnership right off the bat to the IRS. Now, that is beneficial for you starting off, but as you continue growing your business, you may possibly look into expanding and now telling the IRS that you no longer want to file your taxes under the Form 1065, which is the form for partnerships as an LLC. You now want to be able to have more options when it comes to your tax filing and be considered an S-Corp or a C-Corp. In that scenario, again, it's the same scenario whether you have 1 owners or 100 owners. You're looking at an S-Corp being through the 1120S form and a C-Corp being through the 1120. So now that you understand how your LLC works, it's time for us to go over the 5 ways that you're able to file your taxes as an LLC. The first way that you can file your taxes as an LLC is as a sole proprietor. So you're looking at filing through the 1040 form or the 1040 NR if you're a non-resident. So as a sole proprietor, you're often in the situation when you first open your LLC, you didn't tell the IRS any other way that you would like to be elected or be considered for your tax purposes. So now you are a sole proprietor who have a business as well. In that case, you're looking at your 1040, but your 1040, as you may be familiar, is really related to your personal taxes. So in order to declare the profit and losses of your business, you're looking at the Schedule C. The Schedule C is where you'll be able to account for all your profits, all your expense, all your revenue, all your expenses for that year. You'll then have a profit. That profit gets carried over to your personal side. Now, with that, because it is beneficial if you only started off. Typically you're looking at a very low profit or even a loss, so it doesn't really affect you much if you're paying personal taxes rates. Now the other form that you also have to consider as a sole proprietor is your Schedule E. Your Schedule E is for anything that you're getting a passive income from. So you may have rental properties that you're getting an income from on a monthly basis. That is also something that you have to declare to the IRS together with your personal taxes. Now you may be wondering, can I just stay as a sole proprietor the whole time? And the answer is really depends on your scenario. As a sole proprietor, because you are being taxed from a personal standpoint, when you bring in the profit and losses from your business, you automatically combine with your personal income or any other income from your personal side for the year. So in that case, you're looking at least 10% income or 10% taxes that you're paying on your income. And on top of that, being a sole proprietor, you also have to pay your Social Security tax, which is 15.3%. So right off the bat, you're looking at least 25.3% of taxes that you have to pay at the end of the year. Now the second way of filing your taxes, as I briefly mentioned, as a sole proprietor, is also through your Schedule E. This is a completely separate form which is for only your passive income or any income, like I mentioned, if you have any properties and you're getting any rental income from that, you have to declare to the IRS. Now one thing to consider is that because it is a passive income, you're not looking at having to pay your security tax. So that means that 15.3% doesn't really apply to any of your passive income. So the only taxes that you're paying on your passive income through the Schedule E is your 10% taxes. Now the third way that you can file your taxes as an LLC is if you are a partnership, meaning 2 or more owners of your LLC, that you are going to fall under the 1065 form. Now the 1065 form, it doesn't apply to any corporate taxes. You are still just like a sole proprietor. The 1065 comes under your personal income bracket at least. And when it comes to your situation of passive income and active income, you're treated the exact same way. So just as a recap, if you are an active business having active income coming in, you are subject to at least a 10% taxes on the profit and losses of the business. And also your Social Security taxes are still to be paid, which is 15.3%. So if you are an active business with income from the business, you're looking at least 25.3% of taxes to be paid. And if you are somebody who have a partnership, but you're only looking at passive income, then you're looking at the same situation as the Schedule E of a sole proprietor. You don't have to pay any Social Security taxes, and you only pay the 10% taxes on whatever profit or loss you made from that passive income. Now, being in a partnership and filing under the 1065 form, you're also looking at what happens at the end of the year when it comes to dividing everything between the owners. So under a partnership, you do get a K1 under your 1065 form, which is what's going to divide based on your ownership percentage how much each owner is taking on that profit and loss, which allows them to combine that with their personal income so that they can pay their own taxes with everything else involved on their personal end. Now the fourth way of filing your taxes is under the 1120S form, which is for S corporations. Now in order, like we mentioned in the beginning of the video, for you to be an S-Corp, this is something that you have to make an election through Form 2553, and that is have to be done within the beginning of the month in order for you to qualify to be an S-Corp when it comes to your tax reasons. Now, how does an S-Corp really work and what is the benefit of it? This is when you start moving away from being a sole proprietor or even moving from a partnership, and you want to be able to have a little bit of a tax benefit with your higher revenue. So when you're looking at a net income of usually when you cross the line of 40,000 or more, that's when you start looking at moving into an S-Corp, as you're able to avoid having to pay any Social Security taxes as you're declaring your profit and losses, and you are paying only the taxes of 10%. Now, when it comes to an S-Corp, you are dividing your profit and losses just like a partnership under the K1. Depending on your ownership percentage, it is how you get divided for your profit and losses, which then combines with your personal income. So that is a really key point to remember. But even though it's the most popular case, especially in the US right now, it doesn't really mean that it's always the best option for you just because it's the most popular one. Very important point for you to remember as an S-Corp is that you do have to pay yourself under payroll as a owner of the business. So a lot of people are not aware of this and they choose to go to S-Corp because of higher income, but don't really know the ins and outs of having an S-Corp. Now, the fifth way that you can file your taxes is through a C-Corp, which is Form 1120. Now, this is a point where you're getting to a size where possibly foreign investors are looking to come into your business, which is not a possibility under your S-Corp. So you choose to go into a C-Corp so that you are able to have those benefits of extra sources of income or revenue for your business to be able to continue growing. Now, for filing an 1120 form, which is the C-Corp, you don't have to pay yourself under payroll. You do have a couple different options that we can assess here at M7 Taxes, which is looking at possibly having dividends for the owners of the company, and depending on how much money you do have to take from the business or pay yourself through the business, possibly payroll is still the best option for you. Now, to finalize your 1120 filing, which is through the C-Corp, a very key important point that a lot of people forget is that a C-Corp does not flow into your personal taxes, meaning that any profit and losses made through your company in the C-Corp stays in your business. It doesn't involve with your personal taxes, as that is a different completely filing, even though it may happen at the same time of the year when it comes to filing. Another key point to remember is that if you are somebody moving from an S-Corp over to a C-Corp, you are looking at a set rate of 21% taxes that you have to pay for the corporation alone, and then you'll be able to get all the benefits from having a C-Corp. Now, just to summarize everything that we talked about here today, there is a lot of information as we showed you 5 different ways that you can file your taxes. So starting off, our first option is being a sole proprietor. This is for somebody who is starting off their LLC company. They possibly are looking at under $40,000 of profit at the end of the year. This is a perfect way for you to file it under your Schedule C if it is profit and loss from your business, and even Schedule E for any passive income that you may have to flow into your personal income. Now, if you are somebody that goes into our second option, which is a Schedule E, whether you're a partnership or a sole proprietor, you're looking at the same situation. If you only open your business to be able to have rental properties and have a passive income, you don't really have any need to move into an S-Corp, as you don't have much room for investments or even investors coming to your business outside of the US. And if you look to split your shares into more than 100, then you're really stuck in that S-Corp and have to move to a C-Corp. So for you, looking at just passive income, it's better for you to stay under the Schedule E as a partnership, or even if you're doing it alone as a sole proprietor. Now, number 3 for you guys is the 1065 form, which is filing as a partnership. I briefly mentioned, but if you are looking at just having passive income or even an active income, and you're still in that bracket of less than $40,000 of income, it is still beneficial for you to stay where you are right now instead of looking to go into our step 4, which is filing as an S-Corp. An S-Corp, as we mentioned, is when you start moving away from that $40,000 income and you move into a little bit of a higher bracket. But again, S-Corp, even though it may be the most popular, it may not be the best option for you, as there's a lot of requirements, such as all the owners have to be a US citizen, so this means it has to be a domestic business. If anybody is looking to invest into the business, you can only split into 100 shares, and there's only one type of share that you can give out to your investors, which may not always be the case that you want. And as an S-Corp, you do have to pay yourself on their payroll, which may also be something that you may not be looking, especially if you're only looking for passive income. And the 5th option we gave you today is filing as a C-Corp. This is when you do look into taking your business possibly to the next level. If this is your case, you're looking to bring foreign investors into your business, and you're not looking to mix business with personal, and you don't have to live much off of your business as everything stays separate, and the only way for you to take that money from the business, either a profit or a loss, is through a dividend or even payroll to yourself. Now that we gave you the 5 options, you may be wondering which option is best for you. That is why we're here at M7 Taxes, to help you with that decision and be able to sit down with you and let you know which option is the best. Now, you might come to us a day and you just want to find that out in a half hour, but that's not always the case. The best way is for you to become one of our clients so we can take care of you throughout the year, and we can help you with the vision of where your business is going into the next year, 3 years, 5 years, and be able to tell you what's your best option. So in saying that, thank you guys for watching the video. If you did like the content, please like, comment, and subscribe. And again, press that bell so that you can remember every time we post a video, and stay up to date with our series, as this is the second video of our series, and we're going to continue the series throughout the weeks ahead.